So I don't really, it's just, I don't view it as the biggest problem to solve. So it's
Right.
been less of an interest to me. And that's why I only do these things occasionally where I talk about Ethereum because, I don't want to be like the Bitcoiner that's always talking about Ethereum, for example. It's just, it's relevant in this period because of the upcoming merge. Um, and so it's something I'm willing to weigh on here, but that, I kind of just go back to focusing on things I'm more interested in. I probably would not have gotten into it anywhere near to the same degree without Bitcoin specifically. And it comes down, I think, there's basically a handful of different things that result in something being truly censorship resistant, centralized or not. Part of it is the whole proof of work versus proof of stake thing, but then it also comes down to the ease or difficulty of running a full node. That's another thing that came up recently regarding Ethereum's design, is that if it's hard to run a node, if there's low percentages of running nodes, which is technically true for both ecosystems. Not many people run nodes, but it's much less so in Ethereum because it's much harder to run a node, and so they rely on these external, node infrastructure providers that are, in the cloud, and then can just censor whatever they want. And so, for anyone other than a power user, Ethereum's already essentially centralized, and the threshold for being a power user is higher in Ethereum than in Bitcoin. And I think that divide's probably going to grow over time. I mean, you can imagine 10 years of this. How more complex would it be to run an Ethereum node than a Bitcoin node? Bitcoin is inherently designed to be pretty much self-referential. You can build things on top of Bitcoin, but the primary purpose is not to do that. Whereas in Ethereum and smart contract platforms, and I have steelmanned the reason for their existence. I've done that in a number of pieces, both my Ethereum piece and then my proof of stake piece. So I've kind of explored, steelmans for why smart contracts are useful. But if the hard money blockchain is also inherently a smart contract blockchain, I think you have kind of a fundamental divergence, because you open it to be capturable in various ways. You open up the stablecoin centralization problem, where one or two stablecoin custodians can effectively determine the outcome of hard forks by breaking the DeFi, whatever side they don't pick. And number two, you introduced, minor extracted value or maximal extracted value, which is just inherently more centralizing and complex. Well, I think they might attempt it if it came down to it. I think that, as Checkmate pointed out, you don't want to have to rely on that. So I don't completely, discredit that they might attempt to do that if they actually get hard censored. Other than, because a number of them have now said publicly, if Ethereum gets censored, then it's a failed project. And so if you're going to either abandon the project or try, a split attempt, I wouldn't be surprised to see them try that. But I think at that point, the damage is pretty done, because you're slashing, the Timmies. Checkmate already described that well. One thing I observed when looking at the history of Ethereum is that you generally started from a position that was not hard money, and then on the surface tried to harden it, not by actually hardening it, like not doing things like removing the difficulty bomb and things like that actually make it immutable, but instead trying to make it more deflationary, and basically equivalenting deflationary or disinflationary with hardness, which is not quite the same thing. Because, for example, and so with Ethereum, you've started from a position where, you had higher issuance, and they made decisions to reduce issuance, and then they do EIP 1559. We are basically, in some ways, purposely making the protocol less efficient in order to burn more ETH. And that works up until you start to get, kind of market share dilution of smaller users going to other blockchains. So you see, for example, people that want to transact in stablecoins outside of DeFi, if they're actually, say, in Argentina and they want to hold some stablecoins as like near-term savings, they'll often use Tron rather than use Ethereum in order to save on fees. You see some DeFi spilled over onto, Solana, Avalanche, other platforms. Unfortunately, Luna as well. But if you were to hypothetically get another raging bull market in a high fee environment, you probably would see more dilution. Whereas with Bitcoin, they've gone in the opposite direction, where they started super hard and immutable, and then all of the soft forks they do are to try to make it more efficient. right? So SegWit, basically reduced fee pressure. Taproot can also reduce some fee pressure. And the reason I'm not that worried about Bitcoin eventually getting a fee market is because the block space is inherently limited. And so if adoption goes up 5x or 10x over the next 10, 20 years, you'd expect a pretty high fee market. Now, if Bitcoin does not ever develop a substantial fee market, that inherently means that there's just not a lot of demand for block space, which I think is a bigger problem than just the fee issue. That probably would mean you had an adoption failure of some sort. So I think that in general, the concern trolling around Bitcoin's fee market, I think, is premature. If there's no fee market even emerging in like 7 years, by the end of this decade or something like that, I think those discussions become more credible. But in this early phase, especially because Bitcoin is inherently a lower velocity type of asset compared to a smart contract chain, I think that it's just, I don't think that's the main reason they did the switch. I think that's something that they use to try to make, strengthen their argument, but I don't think it's actually the catalyst. Oh yeah, I was just going to point out that, right now, the largest Ethereum miner is censoring Tornado Cash. But you don't have a network-wide censoring of Tornado Cash because other miners can pick up the slack, right? So it's actually an example in action where proof of work is being pretty resilient to mining level censorship, because you would need not only the majority would have to do it, but then you'd also need the majority to not even build on blocks that included, non-compliant transactions. So you need that. It's a really high threshold to hit. And then you have to maintain that, because then there'd be some percentage of those, because the fee offers for the censored transactions would be high, be encouraging. It'd be like a constant enticement to have, say, some miners in censored jurisdictions to kind of get some of their GPUs out, go somewhere else, and mine, those non-compliant blocks. And so it's actually a pretty high threshold to permanently censor the network. And we kind of see it's not even a theory. The bigger problems that it's censored at the node level in many cases, the node infrastructure level, and it's censored at the MetaMask level. And so for anyone who's not a power user, it's already censored, regardless of proof of work versus proof of stake, due to other design considerations. And the proof of work is what's keeping it from being completely network-wide censored. So I think it's changed a little bit because of the ESG narrative, right? And so a couple of years ago, I made the argument that I thought institutional money would be less interested in things outside of Bitcoin. And they've actually been more interested than I would have guessed. And it's actually because, one, they don't really care about the technical details. They don't really care about decentralization. They care about arbitrage and things they can do with it. And I think for them, it's more about that. It's more about the regulatory risk, right? So it's like, what is the security law around this thing? What is the sanction risk around this thing? I wouldn't be surprised to see Ethereum get some institutional adoption once it switches to proof of stake, because then they can really hammer home the ESG angle. I think that there are going to be entities like Coinbase and maybe BlackRock and some of these others that are happy with it. But I think it comes down probably to more fundamental things. So, for example, if Ethereum does not optimize for scalability, it risks losing, market share to other platforms. And then number two, if it centralizes and gets censored, then you lose a lot of the more, kind of the elements that are kind of more cypherpunk in that community would want to, go elsewhere. And so it's got to like thread that needle, which I think is a very, very hard needle to thread. So for me, it's about position sizing. And it's obviously very different between someone who just got in versus someone who has a position and then that position appreciated, right? So a lot of people that have a very big chunk of their net worth in Bitcoin, it's not because they put a big chunk of their net worth in, it's because they put a small percentage in and then it grew to a big percentage, which is, I think, easier for them to manage psychologically. One thing I'm kind of watching for, probably by the beginning of next year, maybe, is when the Fed is done with its hiking cycle. And in a vacuum, risk assets can certainly do well when you have the Fed hiking, right? So the whole 2017 Bitcoin bull market, and that was a stock market bull market as well, the Fed was hiking rates that entire year, and all those risk assets kept going up, because normally the Fed is hiking in a kind of a strong economy, right? That's when they're usually putting the brakes on, is because things are kind of booming and then they're kind of trying to dial that back a little bit. Whereas what we have in this environment is that they're trying to hike into economic deceleration because of the supply side problem. The 2 years already giving us some indication of how far they're going to get, which is, a little further than they are now, but probably not way further, before we start to see more recessionary-like conditions materialize. So kind of what I'm watching for is that potential, pause or pivot or capitulation. And I think it's not here yet, but it's something I have on my radar. And until then, I've just, I'm positioned diversified to be able to kind of withstand the shocks that we're going to see along the way. If Ethereum gets censored on the protocol level, that becomes a very different discussion than if for some reason it avoids having that fate, right? So basically, people can debate about decentralization until it hits the fan and becomes relevant, right? So you can have two things there where one is more decentralized than another, but it doesn't matter in practice, and people can debate it until one of them gets censored and one of them doesn't. Even though the stock market might say go up in nominal terms, I think that the high watermark of asset values relative to the economy has probably peaked. Now, that's not guaranteed, but it's kind of the operating assumption I'm going under unless I see evidence to the contrary. And I think that could filter down to things like cryptos and things like that, where I think you're going to get, various rolling, enthusiasms and bubbles and things like that. But I'm not sure we would see something as large as what we just saw. Now, maybe in 3 years we'll be in another cycle that's even bigger, and I'll be, kind of basically saying, well, I was wrong about that. But, so it depends on how creative I think some of the applications are. But I think it, in a broad macro sense, I have trouble seeing at the level of speculation that we saw, towards the end of last year, and, kind of coming back anytime soon. So I don't really, it's just, I don't view it as the biggest problem to solve. So it's just, It's been less of an interest to me. And that's why I only do these things occasionally where I talk about Ethereum, because, I don't want to be like the Bitcoiner that's always talking about Ethereum, for example. It's just, it's relevant in this period because of the upcoming merge. And so it's something I'm willing to weigh on here, but that, I kind of just go back to focusing on things I'm more interested in.